Okay, and welcome back, students who are taking financial accounting. And this here is a part 2 video for problem 7-50B. I didn't realize, or I just forgot. Let me do it like this. So what ended up happening is I worked out, as you can see on the screen, problem 7-50B. And I failed to realize that I have to record the journal entries called for by the reconciliation. And so, I had stopped the video doing everything that you see here. Okay, so what I did is I made that a part 1, and now as you're looking at this is a 50B part 2. Okay, sorry about that. Just totally forgot about it. I'm so focused on doing the bank recs that I just completely forgot about doing the journal entries. So I'm going to leave this information here, and what I'm also going to do is I'm going to write over this information because I just don't have space. I don't want to erase any of this so that you can see me create the journal entries, and I don't want to be bouncing back and forth between a blank slide and this slide trying to pick up the information. Okay. All right. So remember journal entries. All right. Now I'm going to do this all in black. All right. Our journal entries deal with our cash account or our check register, meaning any adjustments that we have to make to our check register, we have to make a journal entry for and post it to our general ledger account. Because remember, and in the theory video, I had said our check register, the reason why we keep a check register is because we're paying attention to our cash manually. We have a book, and every time we affect cash, we write the deposit in that book, in that check register, or when we write a check, we write it in the check register. So our check register should equal our general ledger cash account. Okay, these should be the same, right? And then when we get a bank statement, okay, we're actually reconciling our bank statement to our cash. All right. Well, which one are we going to use? We can reconcile it to our check register, or we can reconcile it to our general ledger cash account, because these two should be the same amounts. Okay. However, we generally reconcile our bank statement to our check register for the simple reason that whatever we put in our check register has to be journalized. In other words, we have to make journal entries, and then we have to post those journal entries to the GL account. So the GL account can lag in information, all right? But in our check register, we're keeping track of our cash immediately, all right? In other words, if I write a check, I write it into the check register, and I know exactly what my cash balance is. I make a deposit, I write it in the check register, I know exactly what my cash balance is. But when I write that check, or I write that, or I make that deposit, well, I have to make a journal entry, all right? And I might not post those journal entries for several days, so that's why the balance in the GL account lags behind what is actually in the check register. However, when they're posted, the check register and the GL should match, should be equal. And so when we do the bank reconciliation, we're going from the bank statement. Generally, we reconcile it to the cash account, because why? We have to make those journal entries and then post them in order to, make that the same. Now, if you have a very, very small business, you might, very few transactions, you might not use a check register, all right? But that is generally not the case. Generally, businesses have enough transactions going on. I mean, maybe let's say you have a business where you have, just say, one 4-unit apartment building. Okay, well then, yeah, you don't need a check register, because while you're collecting rent 4 times a month, and you're paying, electric, gas, heat, electric, gas, water bill, sewer bill, property taxes, and those, the property taxes you pay once a year. So you only have like 10 transactions a month, okay? In something like that small, then yeah, you can reconcile the bank statement to the GL account. But if you have any kind of volume of transactions in your business, you should be keeping a check register, and you're reconciling the bank statement to the check register. So what we're looking at here is, our check register, and we have these here transactions that were not on our books. Okay, these are our adjustments. So we have to make the journal entries for these adjustments. Right? So the first one here we have for $850 for the rent. Okay, so we're receiving cash, so I debit cash for $850, and we're going to credit what? It's for rent, so that's rent revenue for $850. Okay, then we have a deposit for $225. So we're receiving cash, so it's a debit to cash for $225. And we're receiving a deposit. And what are we receiving that deposit for? It says here this $225 was a collection on account. Well, our on account is our accounts receivable. So we're collecting our accounts receivable for $225. Then we have this $8 interest revenue. So debit cash for $8, and we're going to credit interest revenue for $8. That's revenue on a note receivable. Okay, let's see here. Next, we have a service charge for $35. Right? Now, remember, this is less, so this is cash going out. So I'm going to credit my cash for $35, and I'm going to debit something else. All right? If I had something called bank fees or bank charges, I would use those accounts. Okay, I would pick, I look at my chart of accounts and I see if I have a, something like that, and that would be the account I would use. But if I don't have anything like that, then I would put it to miscellaneous expense. And so far in the text, that's what the authors have been doing, have been putting it to a miscellaneous expense account. However, in the real world, you'll often find that you'll have a bank fees or a bank charge account, a general ledger account, all right, as an expense. All right, then we have two non-sufficient funds. All right, so we're going to credit our cash for, let's see, that's $815,258. All right, and we're going to debit what? Well, remember, these are non-sufficient fund, meaning somebody cashed the check, but they bounced. Okay, so we have to put that back on our accounts receivable. Right, so there was an accounts receivable, and we'll just use this one here. Someone had an accounts receivable for $72. When we received the cash, we debited cash for $72, and we credited our accounts receivable for $72. Well, that check bounces, so what are we doing? We're reversing the entry. All right. Now, I could have made two separate entries, and most likely I would have. All right. I would have had one for 72 and one for 186. However, I added them together and only made one entry for the simple reason that I just wanted to show if let's say I had 10 of them, okay, well, then I'd be doing 10 times the work, and instead of doing 10 times the work, it is, I could just make it as one journal entry, all right, because remember, this here is a general ledger account, right? Right, so all we're concerned with in our general ledger account is the amount, making sure that it's the correct amount going in. But when I make this entry to the accounts receivable, I also have to make the reversing entries to the subsidiary ledgers, right? Meaning if this one here was from XYZ company and this one here was from ABC company, okay, when I go and I post this journal entry here, I'm going to post a 285 to my accounts receivable in the general ledger account. That's going to keep my accounts receivable balance correct. And then I have to come over to my subsidiary ledgers, right? And I have to put in the $72 against XYZ and the 186 against ABC, okay, which is going to, you know, when I add up all of my subsidiary ledgers, the total amount in my subsidiary should be this equal the total amount in my accounts receivable, right, which is that 258 right there. Okay, so that's why we're doing that, right? And so those are the journal entries. And again, apologize for not finishing off this one, but I decided instead of spending 15 minutes redoing all the bank reconciliation stuff again, I just decided to make it 2 parts. If you don't understand something, watch the, pause, rewind, watch the video, go back to 7-50B.1 to see the bank rec. And if you don't get it, feel free to contact an instructor. Okay.